All right, guys, time to get back to work tonight. Weekend's over. Time change is behind us. I'm pretty sure it's about time to get back to work. Might be an hour or so off here or there. All kidding aside, though, right? Monday evening, back to work tonight, getting ready for Tuesday's trading session. We have a lot to cover in a very important video news. Look at a big day coming tomorrow. And from what we can see on the charts tonight, some really great money-making opportunities on all of our favorite markets for Tuesday. Not to worry, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and cover a lot of important stuff here tonight, before we jump in though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in and supporting this channel. If you enjoyed the video, do me a favor. Will you hit that like button? Thanks for tuning in here tonight ahead of what could be a very busy Tuesday tomorrow in any of our favorite markets. But enough of the intro, right? Let's get ready for Tuesday. Big day tomorrow. What's going on the charts here right now? Well, of course, you can see here, everything's bullish on the Emini and the Nasdaq, right? S&P and the Nasdaq are very bullish right now. Got a nice little strong range breakout. Buyers would love to get some pullbacks going on right now, but can they hold this? There's a range right below us. This could easily be setting up for nothing more than a big bull trap and a run right back down to retest those lows. So can the buyers hold the pullback, or will the bears have the last laugh on this? I'll talk about strategy to both buy the pullback and sell the reversal. We'll talk about that tonight on the video. And of course, over on oil you can see here is pretty bearish right now, but you'll see tonight though, with that trading range right above us, the bears have the short-term control right now. They're trying to run this thing back to that 90 big round number, but could this be nothing more than a bear trap down here for a run right back up? We'll talk about strategy on this here, of course, as we go deeper into the video tonight. If you're an oil trader like we are in our trade room, you definitely want to stay tuned and watch more here on the video here this evening. So charts are all ready to go. S&P, Nasdaq are bullish. Oil is bearish. Before we jump in and talk about these trades here for tomorrow, let's make sure we all get on the same page here. Tomorrow, you'll notice there's no major news tomorrow, but that, of course, is done by design because tomorrow, of course, is the very highly anticipated midterm elections. Now, there's been a lot of stats tossed out today. That one stat I saw today was that in every 12-month period after the midterm elections over the last 100 years, right? Last 100 years, the 12 months following the midterm elections have all been bull rallies, right? So we'll see if that continues here the next 12 months after this midterm. That's not going to help us out make money tomorrow, but be aware though, tomorrow we've got that big election tomorrow night. It's tough to tell how the markets are going to react while the data starts coming in tomorrow morning. I would imagine early in, early out, the later we get tomorrow afternoon, I would imagine the more squirrely the market's going to get as people start placing their bets ahead of the election results coming in tomorrow evening. So my game plan for tomorrow will be early in, early out, make our money early, grab some popcorn and watch the results coming in late in the day on Tuesday. The big day, of course, is the day coming after Tuesday's election. Once we all know what the reality is, once the numbers come in, you can imagine Wednesday has potential to be a very big day, no matter who wins the midterms tomorrow evening. And then don't forget, we got some more news coming on Thursday. Got CPI number coming on Thursday. That, of course, is if you take out the election tomorrow, the CPI number on Thursday is the big news of the week. So early in, early out tomorrow, make that money early, and then get a good front row seat to see how the numbers come in, and then save those bullets because, again, we've got a big reaction day most likely coming on that Wednesday, November the 9th. Also, to be aware, too, there'll be no newsletter later this week. There'll be no newsletter on Thursday evening. Don't forget, Friday, the 11th of November, that is Veterans Day, a federal holiday. Markets are open, so it will be one of those kind of half days. We'll talk more about that as we get deeper into the week here this week, but make make sure you plan accordingly on that. Back to our charts though here, because the money, of course, the money is made on the charts. Now, I'm going to cover all my favorite trades in this video tonight. If you're serious about making money in these markets, make sure you watch all the way to the end, because you'll learn different trade ideas, different tactics as we go deeper into this video. And I do try to save the best stuff all the way towards the end, so I'll give you a reason to stick around all the way to the finish. Let's go Emini, we'll go Nasdaq, and we'll wrap things up here on the crude oil for us here this evening. Now, a couple of things. First of all, these are all tick charts. You can see all the time frames in the upper left-hand corner. This is a 10,000 tick chart here on the S&P. I do like to use tick charts. You can find all the time frames in the upper right-hand corner. And also be aware, too, the S&P and the SPY are very similar to the Nasdaq and the QQQ. So whatever we talk about on the S&P and the SPY can pretty much be interchangeable with the Nasdaq and the QQQ. So be aware of that. A lot of the stuff I cover right now on the E-mini can be applied on the NASDAQ as well, and vice versa. With that said, there are three key insights right now that are tipping us off to where the best trades are likely coming for tomorrow. The first one, of course, is a bullish market, right? Bullish into a trading range now with a breakout. Now, why is that an important clue? Well, first of all, whenever we see a bull market that breaks out the highs, we know a lot of times you're going to see buyers come in and try to use some of those prior levels, right? Basically, what was resistance now becomes a level of support, right? So we know those breakout pullbacks are going to be on our radar. We also know the size of the breakout leg is oftentimes equaled or used as a measuring leg. So the size of that breakout leg is kind of what I'm using over here to anticipate where the objective might be as we go higher. You'll see an example of that on oil a little bit later on in the video here tonight. So bullish market into a range with a bull breakout says looking for breakout pullbacks, and the first leg, of course, right, is going to be the measuring leg. Second clue here is that strong move higher. Now, this, of course, is a very strong breakout going higher. Not a very mild breakout whatsoever, a very strong move. Anytime we see a strong move in one direction, what do we expect? A pullback, a retest of the high. Now, once they get that retest of that high, do the buyers struggle for reversal back in? That could be a great trade for shorts here tomorrow. Or do we break through that high and then start making our way up into that measured move at 34 and change, and then potentially up into some key levels up overhead, 38.63, 38.79 and a quarter, right? Anytime we see a strong move in one direction, we expect a relatively deep pullback and a retest of the high. Next up, third one is that support trend line. This support trend line is a pretty big deal because, as you can see here, it really gives the buyers, at least at this point, it gives the buyers a bit of defense, right? Because what happens oftentimes is, and you'll see an example of this on oil, oftentimes what will happen is the market will go up into a trading range, it'll break out and then swing back down, right, in kind of a symmetrical fashion off that high. Does that make sense? Right? So we anticipate that swing potentially back down in the opposite direction. That trend line, right? That trend line is it's a big hurdle, right, for those bears. That trend line also would make for an excellent place to trap in some sellers for that breakout pullback that we talked about earlier. So knowing all of these pieces of the puzzle, the most important thing right now is a strength of that move going higher. It gives us the confidence now to buy that pullback and, of course, try to get that measured move. Now, the big challenge we have is that trading range, right? The range itself is the big challenge because as we pull back, what's going to happen? We're going to get underneath the prior high. The range below us acts as a magnet. So in these situations, whenever I have a kind of a breakout pullback, what I like to do is, and again, we have that trend line to work with, what I like to do is I like to get that pullback and then start to anticipate. If I was a seller right now thinking I want to short back down into that trading range, I'm going to give those bears the benefit of the doubt, let them try twice, right? What I'm going to do here is, again, I have that strong move higher. I'm expecting a retest. I'm also anticipating the bears may try to go back into that trading range, right? Look at oil right now, and you'll see an example, and we'll talk about that in a moment. If I can get those bears to take the bait, if they can come in and try a couple times, running right into that trend line, now I've got their stops right where I want them. Right now, think about it. If you're a short seller and you're stuck selling short, I know that top up there wants to be retested. I can use those stops as fuel, and I can buy into those stops using what I call a 2-try failure pattern. Now, oftentimes these failure patterns, they'll pop right back up and they'll go right into that 21 moving average for what I call a failure into pullback combination. We oftentimes see failure into pullback and then one little trap entry right before we finish off that measured move going higher. Trapping the bears, right? Trapping the bears off that trend line. Use their stops as fuel. Grab that pullback with that pullback combination. And before we reach that measured move, we look for that trap to make sure we buy as low as possible. Failure, pullback, and of course trap as we go here. Now, let's play devil's advocate, right? Let's say for whatever reason the bears come in and they get a much deeper pullback, right? Because again, it's a range down here. Look at oil, right? Oil had something similar to that, and we'll talk about that in a moment. But again, we may not see a lot of buyers who want to buy high. Who knows, right? Some big levels of resistance if you look left on this chart right now. So let's say, for example, though, they run it all the way back here overnight, right? So forget about that trend line. The trend line doesn't help out at all. What if the market ends up collapsing back down? Now, here's the problem, right? It's very difficult to find a short at that point. It's very difficult to want to sell at that point. Why? Because this trading range is a magnet, and there will be trend lines coming down off these levels that will act as great levels of support to go back up into that trading range. If we don't get that breakout pullback, if the market was to, for example, really make that move going lower, okay, I want to be a buyer still because that range is still a magnet. And honestly, whether it happens here or it happens here, I'm looking for the same sequence, right? This is a really important sequence you'll want to learn. If we get that strong rotation off the high, right, that creates what? A lot of momentum for the bears. Anytime we see a strong move, what do we expect? A retest of that level, right? We expect a retest of that low. Knowing that, now we try to use what's called a crown reversal. We want to use the 2-try failure, but because that momentum now will be assumed to be so strong going lower, I let the bears try once, I let them try twice, and I now look for a trap below that low. These are pretty simple patterns, but they're very specific, as you can see, right? Strong move down says beware they're trying to retest that low. Let them try once, go higher, let them try twice. I need that trap on this example, right? I need that trap. We call these crown reversal patterns in our trade room. They're basically 2 tries for the bears, thinking about where their stops are and buying into those stop losses. Now, that crown reversal is what you want before we go back and retest that low. As we go lower, if we do come back, this is the second scenario, if we do come back and retest that low, now you want to think of it as mission accomplished, and now we can be a lot more aggressive on the entry, right? Remember, the bears are going to come in and sell that first pullback. Not my favorite trade because you got that range above us. Once they retest that low, though, mission accomplished. Now, the smart money bears sell high. The dumb money bears, the weak hands, right, the inexperienced traders, they come in and they start selling nice and low. That's exactly what we want. Once those bears get short twice, we now know where their stops are, and we can now once again buy right into those stop losses. Now, the good part about this is your job ain't over yet, right? Your job is just beginning here now. Once we pop back higher, now we look for this combination. This is my favorite kind of combinations. It's basically a failure. We find a new channel by drawing off that high. I'm going to look left and find those prior swings. And I always tell my students, grab that first test. First test is the best test, as we always say. Grab that first test off the low of that channel. Now, that entry, I'm obviously keeping it simple right now to keep the video as short as possible, but that entry could be a trap entry. It could be a failure entry. It could be a pullback entry. It's all the same entry patterns that you guys are learning in our free trading course, right? Which reminds me, I know that most of you guys are in the process of taking the free course right now, or you've taken it and you're making money on those setups on your own. But hey, if you're here watching for the first time right now, if you haven't taken the free class yet and learned things like crown reversals and failures and especially traps, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, take the free trading course to learn all the entry tactics. Most importantly, the strategy that I teach in that free course will help you. It'll make it easy to know where the best winning trades will be. It'll give you a roadmap to help avoid losses. It's perfect for someone trying to make the jump into full-time trading. If you're taking too many losses, if you're missing too many winning trades right now, grab that link, grab that pop-up, take the free class, learn the entry setups. It's perfect for someone trying to make the jump into full-time trading. And most importantly, it'll give you a roadmap to follow each day, which for me gives me a lot more confidence when I trade each day. So grab the link up in the right-hand corner. You're going to love it, and let me know how you do. So again, as the market rolls lower here, it's that crown reversal back up, right? Or it's that retest and that 1, 2 and back up, right? And again, that could happen here and that could happen here, right? They may run it all the way back down to those lows. Now, here's a good question. Is there a way to sell this thing as it's going lower? Right? Is there any easy way to sell it? I think the only way I feel comfortable right now being a seller would be a pop and grind. It would have to pop lower and begin to grind down. And that grind is usually a pretty good giveaway. Now, you're going to want that short before we take out that pendulum swing. Okay? The only real safe way to do this is now draw a trend line off that low, bring it up around that high, right? And then as I always say, look left, find some prior swings, and you want your entry off the top of that channel. And again, I'm keeping it simple, right? Could be a trap, could be a failure, could be a pullback combo as we now rotate off of that high. Again, though, I would want that entry before we take out that pendulum swing, before we get down into some of these big triangle levels down here. Because once we get down to this area, it's all bets are off, right? It's all bets are off. And again, it could happen here. It could happen here as well. One more thing you want to keep in mind. Let's say we roll lower and we V bottom off of that low. Wouldn't surprise me. There could be a bigger channel out here somewhere. You know what I mean? We could get a big V bottom off of that low. If we get a V bottom off that low, it's that same basic pop and grind scenario I just mentioned. Let's say, for example, we don't get the 1, the 2, and the trap and go, right? Let's say they pop right back up and they start to roll and run higher. When that happens, where are the buyers trying to get to? They're trying to take out that big high up there. So now what we do is we mark off that high, we mark off that low. See where I'm going with this? We find that channel, we drill down, find those prior swings, and again, traps are below prior swings. Failures will come in below the 21 moving average, failures into pullbacks, and we're going higher from there. So if all they get is that big V bottom off that low, just promise me you're not going to chase it as it goes higher. Find that new channel and then hit it off the low of that channel for the retest of that high here. That's the way you buy it as it pulls back, and that's the way you sell it, right, as it goes lower here. And again, don't be surprised here if it rolls all the way back down to that low and then runs back up into that trading range. Now, very important question. What if we keep going higher, right? What if we keep going higher? Oh, can I sell that double top? How do we sell that thing? Let's talk about that. Let's grab a look at the NASDAQ here. The NASDAQ, of course, is very similar here to the E-mini and the SPY. NASDAQ, almost identical, right? 3 key insights here right now with a bull market, right? Bull market into a bullish breakout going higher. It's a strong move going higher which again tells us to expect a pullback and a retest of that high. The range itself is a big clue. Why? Because it tells us these prior levels, right? These what was resistance becomes support now, right? And of course, the range also tells us that if I'm wrong, or it's not about being right or wrong. If we don't get that pullback to work, right? We'll talk about that in a moment. If we don't, it's going to want to rotate all the way back down and take out some of these, right? That pendulum swing, take out some of these levels down here. And again, we assume buyers are waiting down there as well. So it's very, very similar here, of course. Got that trend line coming in. That trend line is almost like an insurance policy right now for the buyers on this. It's kind of it's bear repellent, right? It's bear spray. It basically keeps the bears away. Now, again, right? Big wild day tomorrow, election day tomorrow. So it's really not a good idea to think anything can't happen tomorrow, right? Tomorrow, anything is possible, especially as we get later on in the session tomorrow and we start getting more of the wisdom of crowds kicking in these markets. The markets will probably know who wins before we know tomorrow evening. So we've talked a lot about this already on the E-mini and the SPY. As we go lower, I'm trapping in some of those bears. I'm using that 2-try rule. Why? Because of that range below us. That's why. Once they try twice, we can run those stops, right? Use those stops as fuel, and they can look for that 2-try failure into that pullback combination up into that trap entry. Again, you're going to learn a lot more about these in that free trading course, right? So failure, pullback, trap set up. Remember, the size of that breakout leg is the size of that measuring leg. That will be the objective, right, as we go higher here. We got more levels overhead, 11,118 in the Nasdaq, and then a big hop, skip, and a jump higher all the way really up to that 11,460, 11,440 area there. So plenty of space. We can crack above that 120-ish area there, right above us right now. As we go lower, right, it's the same basic idea. It's still a range-bound market. And so this range is a magnet. So as we go lower, it's just the only thing that changes here now is the momentum, right? Momentum becomes very bearish now. And because of that momentum that's bearish, we now look for things like crown reversals. We look for things like a retest and a 2-try back up, right? Most importantly, and again, this could happen. It could happen here. It could happen here. Anywhere underneath that trading range. And then again, the only scenario I mentioned earlier was if it does, for example, kind of pop and grind down like this. The pop and grinds are very, very common. We might see something like this where it pops down, grinds down. We might get that short off the top of that range. They may off top of that channel, they may retest that low, and then the bears come in 1, 2, and then run back up again, right? That's very feasible here when you get these big rotations off the high here. So just be aware of that as we go lower. On the Nasdaq right now, the one that we haven't talked about here yet on this NQ is what if we keep going higher? Well, if we keep going higher, obviously not a lot changes. It becomes even more, more bullish, I guess you would say, right? Even bullisher. And of course, this measured move now, right? That measured move now is taken away. The most important thing is if we do keep on grinding higher, this may easily set us up into one of my favorite chart patterns, which is that pop and grind channel. We're still going to have that trend line coming in below to keep us safe. We're going to draw a trend line off the highs now. We're going to find that channel off that low, right? Look left, find those prior swings, get underneath some prior swings. That's where traps live, right? Get underneath the moving average. Now, if we get that pop and grind going higher, if it pops up and kind of grinds going higher here, remember, this will be nothing more than a continuation of that strong move, and they're going to want to retest. At this point, though, now, we should be able to be a little more aggressive on this and not worry so much about the range, right? Because think about it, right? If we pull back right now, I still got to worry about potentially a pendulum swing, the range. I still have to worry about that range, right? That's why I want to see 2 tries here before I buy into stops there. But if we keep going higher, and again, this would also apply to the S&P as well. If we keep going higher overnight, that really does a good job at removing the fear of that move back into that trading range. Not just a matter of simply finding the pullback entry and running some stops. We have that pop and grind potential as we go higher here, mark up some prior swings, get those traps below prior swings, get those failures off the 21 moving average, get those pullback combinations, and again, those traps as we go higher. We call this the price action cycle, and you'll learn all about this stuff in that free trading course, right? So failure off that low, trap, failure, pullback combo, right? Traps are great to finish off that retest of that high. All right, that's the goal here if we keep going higher here. Basically, if we keep going higher, we're waiting for that pullback, we're finding a bigger channel, and we're basically buying off seller failures off that low, trapping in those bears below the moving average and using their stops as fuel. Now, what if we get the pullback? What if they go back and they retest that high? What do we always say? Yeah, mission accomplished. Now, a lot of this will have to do with this trend line. Right? This trend line is a big deal, right? It's a very big deal. And at this point, I won't be able to justify the short at this point now, right? That's going to be a little bit difficult there to trade that short. The only way to really short this thing off that top would be one of two pattern setups. We mentioned this earlier that anytime we see a strong move higher, we're looking for a retest, right? So once we get that mission accomplished, what I could normally do here is look for buyers once, buyers twice, and then simply sell into those stops. As you can see on this one, though, that's not going to work very well with that trend line coming up, right? It especially won't work well if we slip below, for example, let's say they slip below that trend line and they snap back up. If they hold that trend line and then can't keep below it, that's really going to make for a mess, right? Nobody's going to want to short this thing off that high. So be very careful, right, with that short if we do end up pulling back and then double topping. The only way we can feasibly short this thing at this point now is to trap in the buyers and literally use a trap setup for the entry. This is a very aggressive trade, not my favorite trade for tomorrow. I would rather see something like this. I'd rather get this thing underneath that trend line and then use it as resistance. But you'll notice right away, both on the Nasdaq and the S&P, these are not easy. Right? Not easy whatsoever because you have that trend line, right, coming up. So imagine now we run up, we retest that high now. I can't do much with that double top reversal, whereas in a lot of situations, I will be able to sell off that high. So not a really great example here. It's not easy right now to find shorts. It's not easy. If they pull back and double top, we have that trend line to worry about. I've got to either get that trap entry to make sure I'm selling as high as possible, or I've got to get us underneath that trend line. Just neither one of these are really, really great options here right now because it may end up being fleshed out into one big trading range. The only real short I like right now on this is going to be that pop and grind channel going lower. The key again, well, I shouldn't say that. Let's say, for example, we do end up kind of grinding or popping higher right now. We do find that bigger channel, let's say, right? We get that nice deep pullback we talked about earlier. The market then rallies back up to retest the high. That is a scenario where it is now mission accomplished. And as long as that trend line isn't still hanging out right there, this is exactly where we can look for the one, the two, trap in some of those buyers and try to make a run back down to take out that low again, right? These kind of double top reversals. We mentioned a double bottom reversal earlier on, right, in that video. So that's really the only scenario where you can really start to see some good open space there for the bears to come in, unless, of course, we get that V top and the market simply runs back lower and we're trying to get that pop and grind going lower. So be careful on the short side. That trend line really makes for a difficult job here for those bears. So now I think we've got a pretty good game plan going higher, right? If we go higher, we're waiting to buy the pullback and get that retest. If we go lower, we're trapping in the bears and using either the pullback to go higher or the deeper pullback to go back up now into that trading range. I like the way that game plan came out together. Let me know what you think, though. I'd love to know what you think about it. Am I wrong? Am I right? What do you think? I would love to know in the comment section below. In the meantime, let's grab the oil. We'll wrap things up here on the video here tonight with the oil. S&P and Nasdaq. Pretty difficult to find some shorts right now. We'll see if that changes overnight. How about some oil, though? There are two basic insights right now on oil. One, of course, is that strong move higher and a strong move lower. So what does that do? Right? So strong move higher, right? Very strong move going higher. Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that level. So we know buyers are hunting for a retest of that high. But then you'll notice this is not some puppy dog move, right? That's a pretty strong move lower. Recency. Recency is the key on this. Whatever happens most recently is the one you really got to, well, you have to give the bears in this case the benefit of the doubt. And we talked about this a little bit on the S&P and the Nasdaq. If we do see that strong move down, what do? We look for a crown reversal, back up, or we look for that double bottom and the two-try failure back higher. This may end up going lower here, and the same thing applies right as we go back up. Again, it's basically one big trading range. The market pops up into that trading range, it goes up and rotates back down again. We assume buyers are waiting down here to gobble up those bears, right, and run it back up into that trading range. And then, of course, the next clue is what we call a rotation off the high. We talk a lot about this stuff on these videos. Ranges love to rotate. And even though we have a bullish bias into this trading range right now, as it goes higher and rolls off of that high, this again is a lot of momentum. And this momentum is very important because it tells us to be careful being a buyer down here, even though we do find ourselves at levels of support down below that trading range. So I want to be a buyer, but that rotation off the high, that momentum coming down off the high, it's a very important part of this. You can see an example earlier today, how we had that trading range. There's that breakout leg into that measuring leg. Very common. See the first leg become the measuring leg. Okay, so let's see if we can't put the pieces together on this for oil here for tomorrow. A lot of this we've already covered already, right? Whether we do it here, or even down here, really, the strength of this move lower says we want to get one of two pattern scenarios, right? We either want to get that crown reversal to buy as low as we possibly can. And the reason why you want a crown reversal before we retest that low is because, think about it, with all that strength going lower, as the market goes higher, you're going to have what? More sellers will come in. Again, a strong move down says the bears are going to be looking for shorts as the market pulls back. So I don't want to be buying as the market goes higher. I want to buy it as low as possible so that if for some reason something like this happens, right? This happens all the time, right? We get something like that. Okay, we get a lot of those in our trade room where we'll get the bears trying twice, we'll grab that trap, we'll get our first target hit, stop moves to point of entry, but then all of a sudden, again, because those bears are so strong off the high, they'll come in, they'll hit it again, right? This is why a trap is so important when you're trying to pick a bottom like this and you haven't retested that low yet. Okay, now that's the crown reversal, right? If they do go out and retest that low, now it's mission accomplished. Now it can be a lot more aggressive on this. We can now look for those rookies coming in, those inexperienced traders, 1, 2, and again, you want to use 2 tries here because momentum is so bearish at that point, right? Trap in those bears, and once they get trapped in, those stops are a sit and duck. Now, where does the market want to go at that point? It's going to want to rotate not just back into the range, but the amount below the range, the amount above the range. That becomes my objective now on the opposite side. That's important too, because now we can use, of course, that 2-try failure, grab that new channel as we go higher, right? Find the new channel, grab that channel low, and as I always say, the first test is the best test off that low, right? Makes sense? So again, we're watching for that situation, that crown reversal or that double bottom into that 2 try. It could be here, it could be here, it could be here. Really, the best possible scenario is this thing goes lower here, right, overnight. That's the best possible scenario. We go lower overnight. We get that crown reversal, right, coming off that low, or they take it lower, they retest that low, and then we're going 1, 2, trapping in the bears. Think about how much more profit now potential is on this thing if they take out that low, right? I realize it seems a bit more bearish at that point, but again, you're missing the point. The range is the key here. So if the buyers are smart, they'll let this thing go lower, right? Take out that low, trap in some of these weak hands, and then run those stops going right back up into that trading range again. All right, all depends on what setup we get on this. Remember, it's not very useful to predict what's going to happen tomorrow, right? If I try to predict what's going to happen, it only gives us one way to make money. If I stay open-minded to being or having a game plan for anything the market throws at us, now we can make money in lots of different scenarios, right? Predictions are tough because you only get one shot to make money. Be more flexible, have a mindset of no matter whether we go up or down, I'm ready for no matter what we get. That way you give yourself unlimited ways to make money the following day. Okay, that's kind of the easy part. Now, what if we rock higher here? Right? What if we rip higher and try to go back to retest the high? We've got that strong move going higher, right? So we know they want to retest the high here. If we do see this thing V, right, kind of V bottom off that low, think about that pop and grind, right? They kind of pop, that grind up as we go. There'll almost always be a channel coming in, and I can use that channel now as they try to go back and retest that low. Most important thing, though, is if they do V-bottom off this low and begin to grind up, you really want that trap entry because, again, you got to assume more bears are going to come in and sell it as it goes higher, right? And you'll learn all about this stuff in that free trading course, right? How to draw the channels, how to find the traps, the failures, the pullback combos off of that low. And again, you know where they want to go, right? They want to go back up and retest that high here. What if we went all the way back up, retested that high? Could I then sell it then? Here's the problem. That move itself will be very, very strong, right? There's a big difference between a pullback and a retest and a really big pullback and a run back up. That will be a freight train. That will be a very strong move here. So as we go higher here, if we go back up and retest the high here, I will probably still be looking for a 1, 2 trap high for a crown reversal, or let them retest that high. Then we go after the 1, 2. I could be a lot more aggressive on that one for that short back down again, right? Again, it has everything to do with the momentum as this thing runs higher. Hopefully that makes sense. And if it doesn't, let me know in the comment section. I'll make sure I do a better job explaining it next time. Now, let's say for example, we trap in those bears, right? Trap them in, crown reversal, and the market runs back up. What's a breakout look like, right? What's a breakout look like? There's a couple different types of breakouts that you want to be looking for. And again, this could easily be happening off that, right, off that low as well. So for example, let's say we do pop up and retest the high there, and we pull back, we hold the pullback, and we jump, right? And we blast right through that high. We call these 1, 2, 3 breakouts, right? 1, 2, 3 breakout. Again, it's a strong move up. They take out that high. They pull back to the 21. The buyers, they don't struggle, right? They don't struggle for a move back down again. The buyers hold that pullback, and they jump. Now we have a strong move for the buyers, and now it's easy. Find that high, find the trend line, mark that low, and then go looking left, find those prior swings. My favorite trades will almost always come below a prior swing. You'll learn about that stuff in the free trading course. Great examples of those, what we call first channel traps or first channel tests off that low. That's a way to be a buyer, right, as we go higher. And again, they have to get back up, hold the pullback, and really, right, hold the pullback and really blast and jump through it. Or maybe they don't, right? Maybe they go up, but they don't pull back and blast. They begin to grind and go higher, right? Grind and go higher. Easy. Mark off that high, mark off that low. all of that strength now for the buyers says what? They're going to want to pull back and retest that high, get down below prior swings for traps, get under the 21 moving average. That was a bad example there. Under the 21 moving average, right, for a failure. And then we look to grab that pullback combo for what? To go back and retest, the high and potentially make that run back to 95. 95, of course, being that next big round number going up overhead. A lot of open space up there for oil. Lots of space up there between 95 and 97. So we'll see what tomorrow brings on that here. All right. I think we've covered most of it, right? Again, don't be surprised if it runs lower on all three of these markets and then V bottoms, grinds up, right? That's going to be that spike, that kind of pop and grind. Do not be surprised if we see stuff like that coming off that low. We'll keep on trading that range, buying low, selling high. As you can see, there are a couple of good short setups for tomorrow, but for what we know right now, not a lot of easy pickings on the sell side. We're focused on bear traps at support levels below the range, bull breakouts above the range here. And tomorrow, by this time tomorrow night, we'll probably have a good idea for how these midterm elections turn out, and we'll go into a very busy Reaction Wednesday coming later on this week. So we'll wrap things up here for now. The game plan is all set to go. We get a game plan ready for anything the market throws at us here for tomorrow. Now, speaking of tomorrow, we're back tomorrow morning, 8 o'clock Eastern time in our trade room. If you're missing too many trades right now, if you're taking too many losses, if you're not getting the results you want out of your trading, the best way to learn this stuff is to come out and do it right along with me. We open up every morning, 8 o'clock Eastern time. It's a great place to learn and trade along with us. I'll put all the membership links, all the free course links. I'll put everything you need in the description of the YouTube video. Don't be afraid to call the office. The easiest way to get help with anything we talk about here tonight is to call me in the office or shoot me an email or jump on live chat. Live chat's also a very easy way to get my attention as well. I do respond to comments in the comment section below, so don't be afraid to drop a comment in the comment section. But again, the easiest way to reach me is to go right to the source here at the office here in Los Angeles. All right, guys, I'm going to wrap things up here for now. Hope you guys enjoyed the weekend. Hope you got some rest this weekend and a busy rest of the week here this week. I'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If not, we'll do it again tomorrow night once the elections start trickling in here, getting ready for what could be a very wacky Wednesday in the markets. All right, guys, I'm out of here for now. Be well, be nice to each other, and be here tomorrow. Adios, amigos. Bye-bye for now.